I get a ton of questions from new business owners asking how their business income is taxed. The answer to that is it depends. It depends on how your entity is set up. And today we're talking to all of my business owners out there who have made the election to be taxed as an S-corporation. We're going to define what an S-corporation is, how you report your business income on both the business level and your personal level as the S-Corp owner, and figure out how you can determine what that tax liability is going to look like when all is said and done. So let's start with what is an S-Corp, right? What is an S-Corporation? So any business, you guys, where you've set up a business entity with a separate tax ID number, a separate FEIN, any type of business can make the election to be taxed as an S-Corp. An S-Corp in itself is not a business entity type. So what I mean here is if you're a single member LLC, meaning it's just you and you've created an LLC to separate your business from you personally. Okay, if you're a partnership where you and your buddy have gone in together to start a business, or if you've started a business, whether it's you or multiple people, and you've elected to be a corporation, all right, any of those three, those are legal entity types, and any of those three can make the election to become an S-Corp, or to be taxed as an S-Corp for tax purposes, as long as you follow some of the very specific guidelines that the IRS has outlined. There are many, many benefits to making this S-Corp election, you guys, but there's also a lot of requirements and a lot of things that you have to do as an S-Corp officer. So I highly suggest discussing that option with a tax advisor to decide if it's right for your business. When your business is taxed as an S-corporation, you are required to file a completely separate tax return aside from your personal returns. So that report is called the 1120S, right? So that's your S-Corp tax return filing, and it is honestly, you guys, just a reporting tool. S-corporations do not pay their own taxes. Instead, the 1120S is reported, showing all of your business income, all of your business expenses, resulting in your net or taxable income, and then it issues a K-1 to every shareholder that owns or is an officer within the S-corporation. And then from there, that K-1, the shareholder or the officer uses when they prepare their own personal tax return, and the income is then reported there, and the tax is paid through your personal tax return. So specifically, you guys, when as the shareholder, you're filing your personal tax return, the K-1 information from the S-corporation is going to go onto page 2 of your Schedule E within your 1040. Now, if you're like, all those letters, all those numbers, what are you talking about? Don't worry. If you use tax software, it should be able to guide you in the right place. If you do get to the point where you're not sure where all those K-1 figures are supposed to go in your tax software, that is a really good indication that it is time to hire a tax advisor to help you complete your tax returns each year. So let's break this down into steps. The business that you've elected to be taxed as an S-Corp files the 1120S tax return. That then issues your K-1s. If you're the only owner of the S-corporation, then there's one K-1, you're 100% owner, all of the income is reported to you. S-corps can have up to 100 owners. So maybe you went into business with all of your college buddies and there's 20 of you, then all of you will receive a K-1. But your business income, remember, all of your receipts minus all of your expenses equals your income, your business income. That income is then divided and allocated to each of the S-Corp officers or owners based on their ownership percentage. Okay, and that does, so maybe I'm a 99% owner and my buddy is a 1% owner. Okay, so if there's $100,000 in income, 99,000 of that gets assigned to me and only 1,000 to him. You can set up those S-Corp ownership percentages in whatever way you want. Definitely something you talk to a lawyer about, and also probably a tax advisor as well. From there, as a Now we're talking on a shareholder or owner level. Okay, those terms I'm going to use interchangeably. I get the K1 from the business. That K1, like I said, shows me my ordinary income. It's going to show me a ton of other boxes, you guys. Some K1s have 20 boxes and they all have numbers in them. Okay, we're not going to break down. We're not going to go into what each of those boxes means. What we're just going to talk about today is big picture and ordinary income. All right, which is normally box 1. So I'm a K1 owner. I'm the shareholder in the S-Corp. I get my K1 and it says I have $100,000 in income. That's going to be, like I said, on Schedule E, page 2 of your 1040. And it eventually goes to page 1 of your 1040 and it goes into a bucket of income with all of your other ordinary or earned income. All right, guys, so we're talking about W-2 wages from you or your spouse. We're talking about maybe income from another business you might be a part of. All of that goes into this big bucket, all right? The benefit of that, you guys, is if your business happens to have a loss, you can offset that income from those other sources with that loss. It's not treated separately. It all comes into one bucket. So let's say we have W-2 wages, my spouse has W-2 wages of $60,000 and my S-Corp K1 shows a $10,000 business loss for this year. That makes our income $50,000. So unlike sole proprietors, single member LLCs, partnerships, your S-Corp income is not subject to self-employment income. The reason being, you guys, is as a shareholder in your business, if you are working in your business, you've got to be a W-2 employee within your business. All right, so what does that mean? That means we get to pay ourselves. The business gets to pay us and deduct the expenses for paying us to do the work we're doing in the business. So as a shareholder, I'm essentially going to have 2 sources of income from my S-Corp. I'm going to have my K1 income and I'm going to have my W-2 income from that business. So now that we've gotten our K1 income, we have our W-2 income, all of that, it's on our personal 1040. It's on our individual income tax return. So how much are we going to pay on it? Well, it's all taxed, you guys, as ordinary or earned income, meaning I know you guys hear the terms marginal tax bracket or marginal tax rate. What tax bracket do I fall into? That's what we're talking about, okay, is what percentage is my income taxed at, all right? And we're gonna have a whole video on marginal tax rates and kind of explaining how that works. For the sake of today, let's say all of your K1 income falls into the most common 22% tax bracket. All right, so let's use numbers as an example. I love it. So let's say we have $50,000 in W-2 income from our S-Corp because we're working in it, and we have $50,000 of K1 income, meaning our ordinary income after, income minus expenses equals that $50,000. That means we have $100,000 in income on our tax return. If we're in the 22% tax bracket, that means we're paying $22,000 on that $100,000. All right? There is no self-employment tax. If you've watched any of my other videos for partnerships or sole props, there's not that additional 16%, but keep in mind, you had to run a payroll, so you paid payroll taxes on whatever you paid yourself in W-2 wages. So you paid a substitute. You paid payroll taxes instead of self-employment tax. Moral of the story, guys, you're never going to get out of self-employment or payroll taxes. They get you wherever you fall. It's just a matter of how much you're going to pay. And that's one of the benefits, or one of the reasons people are attracted to an S corporation, is because instead of paying self-employment tax on $100,000 in income, if you only pay yourself $50,000 in wages, you're paying half of that self-employment tax. You're paying half of it in payroll taxes. We have a whole video on that, benefits of that, but just kind of a brief summary of what that benefit means to you guys. So in the end, you guys, when you're an S-Corp owner, an S-Corp officer, it's important to understand these fundamental things. There is a separate tax return that is a reporting device that you have to file with the IRS. You as the shareholder are going to get a K1, and all of that income is going to be reported on your personal tax return. If you're doing work in the S-Corp, you're also going to get a W-2. You're going to get wages for working in the business, and that also goes on your 1040. and then it's all taxed at your marginal tax rate. If you guys have any questions about what we talked about today, go ahead and leave a comment below. And then I highly suggest you head on over to our Facebook community, Money, Taxes, and Finance for Small Business, because these topics are what we talk about on a regular basis and have live trainings on every week. You can access that group by clicking the link in the description box. Thanks for watching. If you found this video helpful, please give it a thumbs up, subscribe, and while you're loving on me hard, go ahead and hit the notification bell so you never miss a future video.